Folks, insanity incoming, and we've got several major things to discuss. Number one, the Squeezapalooza is alive and well. The lovely Lucid woke up midday Friday and doubled at highs. The BuzzFeed setup nearly doubled again. AMC's APE goes up 7% on Friday and then 20% in the after hours. Is there some arbitrage opportunity here? Well, we'll break all of this down. Number two, the next Fed meeting is this week, and we're going to get the next rate hike decision. Since the market has been gaining some froth heading into it, will the Fed guide it down again like it has done so many times in the past, or will this be the first sign of a slow and steady pivot? We'll discuss it and possible market reaction scenarios. And finally, number three, we got to talk about the companies that are going to be reporting earnings this week and what you need to know about them. Let's get right to work, but first, a quick plug. Today's video is brought to you by the Moomoo platform and broker. Very powerful platform that you're going to like a lot, and you can get up to 15 free stocks when you sign up and deposit with them using our link down below. By the way, a lot of people complain that they can't trade in the pre-market and the after hours when a lot of the biggest moves happen. Well, Moomoo's got your back with fully extended hours trading for all US users. Okay, let's go ahead and start with the lovely Lucid. So the Lucid front has been pretty quiet for many months, and then all of a sudden midday Friday it wakes up and goes from 9 to like 1780. This is actually a fascinating case study in Squeezy McSqueezes. The short interest is at about 25%, which in and of itself is nothing to scoff at, but the dollar volume short on this is well over $1 billion. You compare that to other short stocks that have short interest at 25% or even 50 or 70%, and this value is still much higher because Lucid's entire market cap is much bigger than most of the small caps that have much bigger percentages of short interest. So that means what? Well, it means that net, the risk to short sellers dollar-wise is significantly higher in this stock versus most other stocks combined. And they were willing to take that risk because of how bad macro headwinds are expected to hit EV hopefuls, and Lucid has been one of the biggest EV hopefuls, right? But that might just be coming back to bite them in the rear end. Lucid shares rallied Friday on rumors of a takeover from the Middle East. Takeovers usually are at a steep premium to share price and force shorts to cover. And fundamentally, I mean, in this overall EV race, Lucid has always been one of the most attractive beasts. Mostly because not only have they had a very easy time of getting capital here in the US, but they are also largely owned by the Saudis and are a key part of the Saudis' goal of diversifying away their overexposure to oil. One of the arguments for Lucid has always been that when push comes to shove, they'll never be short of capital because unlike other EVs, the Saudis just won't let them go bankrupt. They won't be willing to lose their massive investment. They'll just go and inject more capital into them if need be, and the Saudis are not running low on money. That's one thing you don't got to worry about when it comes to them. But as the public share prices of Lucid have dropped to 70, 80, 90% down, it creates this dynamic where it may make sense for the Saudis to just buy the entire entity in its entirety. That way they can better protect their entire investment, and if they're going to go and inject more capital into them anyways, at least they can benefit more from that. Quite frankly, as Seeking Alpha contributor Jonathan Weber pointed out, the Saudis just put another $900 million in Lucid back in November, so they aren't exactly backing down on the value they see in Lucid. They're continuing to hold strong and continuing to bet more and more on the stock. Analyst Garrett Nelson said Friday, if the Saudis buy the remainder of the company, we think they would likely invest more heavily in fixing the operational issues, which have constrained its production growth, and it likely provides a greater degree of viability for the company over the long term. So the overall rundown here is that a potential Lucid takeover could be very beneficial for both sides. The Saudis get to protect their overall investment, an investment they're going to have to infuse a lot of capital into anyways, and Lucid can benefit because obviously they get a more direct infusion of capital, but at the same time, they don't have to worry about diluting their share price in order to make operations work. But as of right now, when I'm shooting this video, it is still just a rumor. We don't know whether or not the Saudis are going to go through with this. But the rumor has already been strong enough to really punish those shorty McShortsters. And here's the deal from my viewpoint. There's no situation where the Saudis were going to buy this for double the share price Friday morning, but the stock rallied that much because you had shorts saying screw this and getting out fast, and the rumors and momentum buyers rode that wave. And I expect that you're going to see a lot more of this. You're going to see a lot more short sellers decide, hey, you know what? We don't want to take the risk of a potential takeover, so we're just going to go ahead and get out now. And the act of getting out now in whatever resembles a panic could really rally up the price here and provide a lot more opportunities for traders. Okay, so let's go ahead and move over to BuzzFeed. So for context, we originally briefed on BuzzFeed, ticker symbol BZFD, at about 137 a share Thursday morning, and it ran up to 425. That's about a 210% increase, briefing price to highs in just 2 trading days. Now, honestly, we saw a one-day run coming, but really we did not expect a second day of massive momentum. And hey, I'm not complaining, but it just goes to show you how crazy this market condition is. About 3 months ago, if a stock came out and said that they were going to solve world hunger, cure cancer, and end all war, and make trillions of dollars doing so, the stock might go up 1%. Now, you just have a little bit of an announcement here and there and a spec catalyst, and all of a sudden the stock goes up 200%. This is speculation and froth that we haven't seen since 2021. But anyways, there were 2 reasons BuzzFeed rallied. The first is that Meta is going to be paying them millions and millions to create content for Facebook and Instagram. The second and more covered reason is this new trend of stocks partnering with ChatGPT and creating AI content. The stock market loves a new frenzy, and this ChatGPT frenzy, like I said on Thursday, is going to be the next trend stocks try to jump on and get rallitos. My thoughts on BuzzFeed though? Well, watch the overall direction over our red directional SMA line. My guess is still that it's going to break below it and die early this coming week, but as long as it sits and continues running over it and you have some margin, I'd expect to see that become a self-fulfilling prophecy until the momentum eventually takes a breath that it just can't recover from. This stock is already up a lot though, folks, and it's going to create a lot of bag holders when all is said and done. So, unless you want to have a collection of new bags, always ask yourself before you enter any position, when am I going to exit? Is it at a stop loss? Is it at a break of an SMA line? Is it at a break of a directional SMA line? Let yourself know that before you enter into the position, because otherwise you're just exiting when it feels like the right time. And usually when it feels like the right time is not when it's up, okay? Let me just tell you that. It almost always feels like the wrong time when it's running really fast because you're like, no, I want to keep getting those profititos. Okay, AMC's APE. So for context, AMC decided to do a spin-off dividend to APE, which they would then use to raise capital. AMC and APE are nearly identical and have nearly all of the same rights. The only major difference is that APE is approved to be diluted. And as APE was diluted and people dumped shares to avoid being further dumped on, APE performed much more poorly than AMC did. Now, if you go back to my last AMC video I did back in August, I explained that this was what was going to happen, and I got reamed for it because you're not supposed to say anything critical about AMC, even if that means preaching risk management, but that's okay. We'll let bygones be bygones. Charlie is a big boy. However, now that APE is down in the couple dollar range, it's become not as great of a tool to raise capital for AMC, and thus now it's essentially useless to them. In fact, if AMC dilutes it more, it's like offering shares of its business at a steep discount, which doesn't make any sense. CEO Adam Aron said this himself. Given the consistent trading discount that we are routinely seeing in the price of APE units compared to AMC common shares, we believe it is in the best interests of our shareholders for us to simplify our capital structure. And so AMC just announced via proxy filings that they will hold a special shareholder meeting to vote on March 14th on whether to convert APE units back into AMC common stock, which is why APE rallied after hours Friday. So now there's this question of, okay, if AMC and APE are going to be recombined and they are alike in every major way except for their dilutability, then perhaps there's a lot of arbitrage in buying APE right now, right? If they are valued 1-to-1 in a combined entity and the share price of APE is discounted at 192 and AMC is at 551, then does that mean that there's a 186% of upside if you buy APE? Well, it seems to me that there is indeed a very large arbitrage opportunity here, but it is hard to say the exact amount. The question is, at what price will they actually be combined? Given where they are at right now, my expectation is that APE sees a huge boost in price heading into any combination with AMC, but at the same time, AMC will see a negative effect as its holders prepare to factor in the dilutive impact of re-adding APE into the total share count, which changes the overall structure of shares outstanding. Now, perhaps AMC has the benefit of more small cap rallies in the broader small cap market, and that causes a lot of the negative impact to be sort of softened and even blown over, depending how frothy the small cap market gets. But I would say in a general sense, sense, this is good news for APE and bad news for AMC, at least in the short term. It's also worth mentioning that you had Antera Capital go and buy nearly $35 million worth of APE back on December 22nd, presumably to take advantage of this arbitrage opportunity. So I think that it's probably not crazy to expect the arbitrage opportunity to be pretty solid. Now, obviously, I see this as bad for AMC stock in the short term, but is it good for AMC in the long term? I would say yes. It's going to be better for AMC to be combined, so that way if AMC needs to raise capital and they get approval to do so, they can raise it at a much more appropriate price versus what's happening now, which is they're just raising capital at a very, very bad price, given that APE is trading so far discounted. Now, in terms of other trade ideas and certain catalysts that haven't dropped yet that could be dropping in the coming days, if you'd like to see our daily morning briefings where we brief on all the catalysts we see each and every market open morning, I'll go ahead and put the link to ZipTrader U down below. And if you join us now, it's still not too late to see tomorrow's morning briefing, which will be posted 30 minutes prior to market open as always, and I believe you're going to see a lot of useful tickers. No guarantees, of course, because we can't control the market, but I think there's a lot of trends that are heating up pretty aggressively right now. Okay, let's go ahead and talk about the Fed. So Wednesday at 2 p.m. we get the rate hike decision, we get the federal funds projection through the end of 2023, and we get a Powell press conference. We get to see this wonderful mug. Markets are anticipating a 98% chance the Fed is going to raise just 25 basis points to a target range of 450, 475. And what's the expected path the Fed is going to take moving into the end of 2023? Well, it's expected the Fed will hike slightly more into summer and then start cutting. My thought process, while inflation is still too high year over year, the economy is still too quote unquote strong. So I don't foresee the Fed signaling any sign of pivot this early in the process. In fact, I would make the argument that the froth in the market and small cap sectors we've seen so far in 2023 is going to put even more pressure on the Fed to guide markets lower and financial conditions even tighter. Best case scenario this week, I see the Fed going forward as expected and not surprising markets at all. Worst case scenario, I see the Fed trying to scare markets back into submission. That's my take. The odds, though, of hiking more than expected are very, very low. The odds of not hiking are also very, very low. Probably just tough talk if the Fed wants to discipline markets. Okay, finally, let's go ahead and talk about earnings and really the ones I care about. SoFi on Monday, what is loan origination growth looking like? We still got that loan moratorium on student loans in place until August, but how are they handling their other segments in this environment? You got Philips, Ryanair, Whirlpool, NXP. Tuesday, you got ExxonMobil. How's profitability performing as oil prices go down? This is the second most valuable oil company in the world, right? UPS, what are we seeing in terms of shipping volumes and profitability? GM, how are supply chain costs and disruptions looking? Pfizer, Caterpillar, McDonald's, Spotify, Philips, AMD, Snap, EA. Wednesday, you've got Waste Management, T-Mobile, and then we've got Meta. Meta has been laying a lot of people off. Let's hear their projections on their ad business and what's happening next. More layoffs coming, Zuck. You got McKesson, Allstate, and MetLife. Then Thursday, you've got Merck, Lilly, Honeywell, Hershey. Are they still selling kisses? So important to our economy. I foresee the chocolate trade coming back in full swing. This is why Belgium and Switzerland do so well. It's because they got the chocolates. Then you got Sony, and then the big dogs after close. Amazon, Alphabet, Apple. It only takes one of these to report disappointing earnings, and boom, you've got yourselves a panic. Which one will it be? I'd say most likely it's going to be Amazon. Second, most likely Alphabet. Thirdly, probably very unlikely Apple. Amazon is suffering from the overall online retail slowdown. Alphabet is suffering from the big drop in ad spend. They've also got this new government antitrust law problem calling for a breakup of their ad business. But Apple seems to be the least likely to surprise. Yeah, smartphones seem to be slowing down a bit, but they've got other hot segments to average that out. Ford, Qualcomm, Starbucks. How is Starbucks' mediocre coffee selling? One of the best ways to tell if you're in a recession is if people don't feel the need to buy $8 sugary mediocre coffee. I'll admit sometimes I do go to Starbucks and I'm not proud of it, but they do have outlets for me to plug in my computer so I can sit there and do my work and drink their coffee, so on and so forth. By the way, if you want to work at a Starbucks, never go to a busy one because they almost always cover the outlets at the busy Starbuckses because they want to encourage table turnover. If they have outlets, people just sit there all day. Anyways, Friday you have Sega, Regeneron, Sanofi, and that's pretty much the highlights. So anyways, folks, lots and lots to get ready for. It's going to be a very, very exciting week. Make sure to hit that ravishy like button and subscribe. Make sure to also sign up to receive our free research reports, which will be going out very, very soon. All you got to do is go to the Unlock Reports link down below and put in your email, and we will send you the first research report. Have a great one, folks, and we will see you in the next video.